Welcome everyone to Vested Interest. This is Shane back for the weekly portfolio update. We do these every Sunday morning at 7:30 a.m. And before we get in the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. And for those of you who may be stopping by for the first time on this channel, we cover dividend growth investing, buying stocks in good companies that pay growing dividends, and we hold for the long term. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks, dollar cost averaging, into growing companies with positive cash flow that covers the dividend and have a high return on their invested capital. I cover all my investments into the portfolio. That's what this is going to be. It's going to be a portfolio update. We're going to cover the $1,769 we invested in new capital into the portfolio. We did sell out of one position and reallocated $452 of those funds. We had some options plays. We had a little bit of dividends paid. So we will cover all of that. And for those of you who would like to help out the channel, I don't have anything to pay for. I don't have a paid Patreon. I'm not asking you to buy any courses or sell t-shirts or mugs or anything on the channel. Maybe in the future I'll sell you guys some merchandise, but right now I'm not selling anything, just trying to build a following here. And for those of you who would like to help me out, if you could hit the thumbs up down below if you find any value in this type of content, if you are a dividend growth investor, hit that subscribe button, join us on this journey to financial freedom, join the Vested Interest community, and don't forget to hit that notification bell so you're notified whenever we put out any new content. It really does help when you do all those things for a small YouTube channel like me with the YouTube algorithm, and dropping a comment down below or sharing with anyone you think that might find value in the content as well. That helps also. So let's get in the video and see what activity we had in the portfolio. Like I said, it's going to be jam-packed. We had a little bit of everything that could really happen in a portfolio happen this week. So let's jump in. And we will start off on February 20th, Monday, with some options. We did receive $266.70. It was a good week for options premium. Really good week. We had quite a few options plays hit. You can see the 4 here. So we had 4 separate contracts. First one was for Pfizer, ticker PFE, right? This is out of the healthcare sector. We had 100 shares, 1 contract. That's what that 1 means, -1. And a contract is for 100 shares. PFE, that's the stock. February 23rd, that was Friday. So started it on Monday. Close date is Friday with a strike price of $27.50. This was a covered call. So we had 100 shares. That's why it's a covered call. The shares are covered. We already own them. And we received $41.45 in options premium. So we keep this options premium, whether that's called away or whether this expires worthless. And as you can see here, we're going to jump down to the bottom. Pfizer was assigned. So that means those 100 shares were called away. That's why that -100 hits. 1 contract, 100 shares. Strike price of $27.50. I think it was like $27.67 or something like that. So we lost the 17 cents, but the $41.45 more than makes up for that. So now we have $2,749.95 in cash. We will turn around and do the opposite of this right here and run the wheel on this one. Now that the covered call was called away, now we will do a cash secured put, taking $2,700 for another, right, a put like this BAC put right here. We'll do, instead of a call, we'll do a cash secured put using these funds. Now we'll keep that $49.95 extra, right, and then we'll keep running that, or $2,750. So we'll have to add a nickel to it to make the $2,750 to run that wheel. Next up, we had a cash secured put. So this is one that was called away. If you remember, Bank of America was called away last week at $33.50 strike price as well. So now we are running the wheel on that. So 1 contract, Bank of America, ticker BAC, out of the financial sector. Same date, February 23rd. Close out that contract on Friday. $33.50 strike price. We received $23.45 in options premium. And jump down here to Bank of America. This expired, right? Expired, worthless. So that means it was above $33.50. So we keep that $23.45 in options premium. We will run another cash secured put, probably at that same strike price, $33.50 next week, whatever we get for it. I think actually we already ran this one. It's like $17 or something that we'll get an options premium if it hits. Now, just because we put these options out there doesn't mean someone has to take them. This week, people took 4. I think we put out 5 or 6. These are just the 4 that hit. Next up, we did 1 contract. All of these, again, same date. We're opened on Monday the 20th, all set to close on February 23rd. We did one cash secured put again. So last week we ran covered call on Nutrien. Nutrien was called away. Now we have that cash. So we did another cash secured put at that same strike price, $50 strike price. NTR is Nutrien. This is a Canadian company out of the material sector. We received $89.45 for that. And we'll jump down here. Nutrien, that cash secure put, expired worthless. So we keep that $89.45. We still have the cash. We will run that wheel again next week. Another cash secured put. We'll see what options premium we get for that one. And last but certainly not least, on the 20th, we ran a covered call. So we have 500 shares. We actually have more than 500 shares, but we only did 5 contracts. That's why it says 5 right there. On MPW, this is a REIT out of the real estate sector. That a lot of people, are probably jumping out of right now because it's still staying under that $4. But we ran a $4 call on Medical Properties Trust, ticker MPW, and we received for strike the February 23rd close date, $4 call. We received $112.35 in premium, and if we jump down here, it expired worthless. So we keep that $112.35, and we keep those 500 shares of Medical Properties Trust. So again, all total with these 4 different contracts, we received $266.70, and you'll see this all. This is part of that $1,700 in new capital. This went right back into the portfolio. So this running these options is creating additional income to put back into the portfolio every week. It's so far doing what it's supposed to do. Now, here is where we reallocated some funds. This was actually February 23rd on Friday, right before I closed out of my account. I just said, to heck with it, let's go ahead and make some moves here. So we did. I know we talked about this last week. We went ahead and sold our Williams-Sonoma position. We only had 2 shares and some fractions of a share. I think those will end up selling here in a week or so, whenever this one closes out, or next week sometime. But we did sell those 2 shares, $226.46 strike price. It gave us $452.91 in capital. That's the reallocated funds that we went. And with those funds, we pretty much bought, I think we had a few pennies left over. We had pretty much bought into these 4 different positions, all existing positions in the portfolio. We added 5 more shares to our Siboney-Stillwater position. This is out of the material sector. This is a mining company out of Africa, ticker SBSW. We picked up those shares at $4.28. 2 more shares to Nutrien. You probably recognize this, ticker NTR. This is that company we were running options plays on. So we bought 2 more shares there. This is also a Canadian company, so there are some tax implications you want to know about. Check with your tax advisor if you're not familiar. If you're brokerage, check with them as well, your brokerage account. A lot of times they'll take the taxes out for you. If they don't, you need to be aware of them. My brokerage account, I use Ally Bank. They take out the taxes for me. So we picked up 2 more shares of Nutrien at $53.50. We picked up 4 more shares of Realty Income, ticker O. This one has really pulled back. I really want to build this one out a little bit more while it's under my cost basis. $52, $53, probably even $54. I'm going to be buying this one over the next several weeks. I love it to pull back even more. But we added 4 more shares here with these funds. Realty Income, $53.09 per share. This is a real estate or a REIT out of the real estate sector, the monthly paying REIT. Realty Income, ticker O. We added 4 more shares to our Enterprise Product Partners position, ticker EPD. This is out of the energy sector. Picked up those shares at $27.77 per share, and there's that sale of Williams and Sonoma. So there's the reallocated funds, that $452.91 spread out across these 4 positions. That added, so taking away the funds for Williams and Sonoma, the 2 shares, and then adding in these positions, that flipped to the positive $25.99 in additional passive income. So my Williams and Sonoma position was really not paying much to me, and I was able to flip those funds and increase my passive income by $25.99 over the next calendar year. That's very nice. Anytime I can sell a position, in this position we had an 85% gain. So not only did we have an 85% gain, but we increased our passive income over the next calendar year. So that was a very good flip, in my opinion. That's why I did it. I thought that one would have really run up with 80, I think it was a little over 87% gain. So I was willing to book those gains and roll them into other positions. And this also reduced my cost basis in every one of these positions as well. I'm down in the red on all of these, so it was a way to bring down my cost basis and increase my passive income. while cashing in on a position that was up significantly that I think is probably a little overpriced right now. All right, now we get to the dividends. It happened to be Williams and Sonoma also paid us dividends on Friday. So this $1.82 will just go back into cash. I didn't even work out the numbers on the passive income. It added 0.00804. So that's another reason I sold Williams and Sonoma with those shares. I mean, it really wasn't adding a whole lot, $1.82. To me, it was just, instead of getting that $1.82, I think it amounted to like $6 or $7 out of the year. It was just better to flip it, throw it in those other positions, and get that $25.99 more over the next year. So I thought it was the right move, and this is kind of reinforces why I did it. Now, into our first new capital allocated, we added $730 on Monday whenever we set up those options plays on Monday. We added 10 more shares to our Alibaba group. This is a Chinese company, so I know some of you are just totally against buying Chinese companies. I think this is very undervalued right now. I've been adding to it every week over the last 6 or 7 weeks. I'm going to continue to do so. I think I'm at 74 shares now. I'd like to get over 100 to 120 shares and then probably pull off this a little bit. But 10 more shares of ticker BABA at $73 per share, added an additional $10 in passive income. And last day we invested a big chunk, February 23rd on Friday. This is whenever we really sunk in a lot of the money from the options play, as well as what we typically do every week. Usually I invest around $1,400 to $1,450, which is an additional $266. That pushed us well over $1,700 this week. So with those funds, we invested $1,039.44 on Friday, February 23rd. We picked up 3 more shares of Medical Properties Trust. So not only did we run options play on this, we added a few more shares there. We picked up 3 shares, ticker MPW, out of the real estate sector at $3.80 per share. This Comcast position we've been building out, much like the BABA position. I'm going to continue to run this up till I get around 100 shares. I mean, so long as it stays down relatively cheap, $43, $44 or below, I think I'll build this one out. Comcast Corp, ticker CMCSA. This is out of the communications sector. We picked up those 4 shares at $41.99. AT&T, another one out of the communications sector, ticker T. We added 4 more shares there, just under our cost basis. We added those shares at $16.79. Vale, another mining company out of the material sector. This one's out of Brazil, ticker VALE. 4 more shares at $13.53. Another one that was right below my cost basis, so didn't mind bringing that down a bit. And you see it. Yep, that's right. It's not, it's not a mirage. You are seeing double. I did add 4 more shares from the new capital pile in Realty Income, ticker O. Again, this one is just really cheap right now. So not only did we, whenever we sold out the Williams and Sonoma position, did we add some shares, we added some with new capital. So 8 more shares total, 4 here in this tranche of Realty Income, ticker O, at $53.15. We added our weekly purchase. We're going to do 2 weekly purchases here, SCHD and VTI, the rest of the year, right? This is the Schwab dividend growth ETF, 1 share at $77.91. And it doesn't matter what SCHD, ticker SCHD, is at for the week. I am going to buy 1 share, right? If it runs way up, I'm going to buy 1 share. Now, if it drops way down, I may, if it was to drop down into the low 70s, 72, or back into the 60s even, that would be awesome. I would probably double down and pick up at least 2, maybe 4 shares a week for a while. We picked up 4 more shares of Cisco Systems, ticker CSCO. This is out of the information technology sector. We picked up those shares at $49.06 per share. This one, another one down below my cost basis, so I'm decreasing my cost basis, increasing my dividend yield and my future return. A lot of these positions, that's why I added to them, because they are below my cost basis, so I'm seeing a lot of opportunities, at least in my portfolio right now. I know tech and large caps are really running up, but a lot of my dividend payers are pulling back, so I don't mind adding to those. And last but certainly not least, another one, just like SCHD, we're going to add 1 share of VTI. That's Vanguard Total Stock Market ETF. That is all of the positions in the New York Stock Exchange, the entire stock exchange in America. Every company in American stocks is in this ETF. So we picked up 1 more share, and same thing as SCHD. Doesn't matter what the price is. I was getting this down in the 240s last week, so it's really starting to run up. $252.12. And another one where if it was to pull back significantly, let's say it dropped to the 230s or 220s or 2 teens, I would probably add a couple shares per week and back off the other positions to build these out. All total, this new capital, $1,039.44. the new shares added to these positions, all existing positions in the portfolio, added an additional $40.59 in passive income. All total, we invested $1,769.44. This does not include the reallocated funds from the Williams and Sonoma sale. This is all new capital. All the positions that we added to the BABA position, the reallocation is in this, as well as the position here at an additional $76.58 in new capital over the next calendar year. Pure passive income. So I bought the new shares. These shares will pay out dividends. These will be the dividends over the next calendar year. So that's what it's about. Now, a quick run through the sector weights. Communications sitting at 9.12% of the portfolio. Consumer discretionary at 4.20%. Consumer staples at 11.72%. Energy makes up 6.25% of the portfolio. Financials sitting at 8.07%. Healthcare makes up the largest chunk at 16.71%. Industrials at 7.73%. Technology sitting at 7.44% of the portfolio. Materials makes up 11.91% of the pie. I think that's the second, that's the second largest position there. Utilities sitting at 4.36. I am seeing a lot of utilities, especially in the water, water reclamation, wastewater treatment plants have really pulled back over the last couple of days. If you saw some of my stock pick of the day videos this week, I actually covered two of them, AWK and AWR. Might be worth a look if you're looking for something in the utility sector. Water's not going anywhere, right? I think we're going to need it as long as we're on this planet. REITs and real estate sitting at 11.25%, and ETF still the smallest sliver here at 1.23%. I do believe I will probably, and I'm not going to say never switch over to where I have most of my portfolio in ETFs, but for right now, I'm liking having individual stocks, so that's going to remain the largest piece of my pie for right now. But I do have some ETFs, SCHD and VTI. So for those of you who are ETF investors, want a just simple, easy way to just dollar cost average every week and not worry about it, ETFs are the way to go, and those would be two of the ones that I really like. VOO is another one. VUG is another one that I like as well. There are other ones out there. Those are some Vanguard ETFs that are really nice. If you want something for like emerging markets, VWO would be a good one as well. Over here on the right, you can see the portfolio sector weights broken down by percentage again, and then also the dollar amount allocated and the total amount of the portfolio down here. Now here it is. I show this every week, whether the market's up, whether the market's down, whether I'm up or whether I'm down or floating sideways. I'm going to show you my portfolio. I want people to be able to see a real portfolio built out by a real person, not a financial guru or someone who has a background in finance or come from a family who's into investing or had investments. I'm not a trust fund kid. I've built this myself. I'm learning as I go. So hopefully we can learn together and you can learn from my mistakes, not make the same ones, and share your experiences so other people can learn from your experiences, both good and bad, positive, right? Because some of the best learning we do is whenever we have negative experiences where we learn what not to do. So hopefully you can learn from seeing what I do and seeing a real portfolio built out over time. That is the idea here, to try to give any of you out there who have not started your own journey that encouragement to and realization that you can do this. It's not something that you have to have a financial advisor create a portfolio for you. You can do it, especially with all of the stuff out there now. A lot of banks, my bank, Ally Bank, offers a brokerage account right through them where I've got it linked up to my savings account where I can slide money over and buy all of the same stocks that brokerages buy. So it's very easy, very nice, not really complicated. Here's the ticker for each position in the portfolio, how many total shares I have in this column, current price as of the close of business on Friday, market value as of the close of business on Friday, average share cost, this is my average price per share right here, purchase price, so this is how much I have into each position, total out of my pocket, right? These are the actual funds out of my pocket. You'll see the total return, whether I'm up or down. I'm going to show it. If I'm in the green, great. If I'm in the red, well, that happens. We're not going to win them all. Here's the percent return right here. Sector weights, what sector each position falls in, quarterly, monthly, semi-annual payer, where they fall at in that range. Now, some of them like BABA, one of them actually like BABA. These two down here, SBSW, Siboney-Stillwater, and Vale, the two mining companies, they do typically pay out semi-annual, but BABA right now only pays out annually, one time a year. I just put it in this column because I didn't want to make another one. It starts to get a little, as you add columns, as I add positions or add new columns, it makes it harder to read. So I just kept that out and left it in the semi-annual column. So yes, I know that BABA only pays out once a year. Current yield here as of the close of business on Friday, my yield on cost, the portfolio weighting. So what we saw on the previous slide was the sector weightings. This is for each individual position in the portfolio. And a little note on that, for the portfolio weighting, I don't want any one position to be more than 10%. I don't have any that are over 10%. I have this one right here. Johnson & Johnson is the largest at 8.26%. So I don't want any one position over 10%. And if we're talking about sector weights, I don't want any one sector over 20%. So healthcare is the largest sector as well. Johnson & Johnson in the healthcare sector is my largest position, along with Pfizer down here. Those two are my largest positions or largest sector in healthcare. Payout months, or I'm sorry, estimated annual income. Jumped right over that. This is really the most important column too. Estimated annual income in this column. What months I get paid out my dividends. Dividend growth year over year. You're seeing a lot of dividends. Some of these, when I bought them, they had growing dividends and they've since suspended. Ally Bank, Union Pacific, actually, I'm a little disappointed in them. They have not grown their dividend in the last 4 or 5 quarters. So I'm going to be looking at these hard. Kraft Heinz is another one, hard over the next year and a half. And if they don't start growing their dividends again, I may be looking to trim some additional positions and roll those funds into positions that are growing dividends. I want growing dividends. I don't like this, but I will give them 3, 4 quarters to get their acts together. But right now I have 1, 2, that for all intents and purposes, Enbridge, that last raise really wasn't a raise. Kraft Heinz hasn't been, OHI, which this one, I probably wouldn't cut OHI, Omega Healthcare Investors. It's a REIT out of the real estate sector, a lot like MPW. I'm up quite a bit on that one. Not only am I up, but it has such a high, I have a 9.397 yield on cost. So it's almost 10% on my money on that. I would leave that alone, even if they don't raise the dividend, and call it like a bond. I don't mind a 9% bond in my portfolio with growth in the stock price, right? I'm up 9%, plus I'm getting a 9.37%, 8.6 yield right now, but 9.397 is what I'm getting yield on cost. I won't trim that one. This one, SBSW, same thing. I'm looking more for price appreciation, even though I'm down quite a bit of that one with it being so cheap. And a couple other down here. UNT, I knew it wasn't growing its dividend. I bought this one after they did they cut their dividend, so I knew this one would take some time to grow, so that one I probably won't cut right away. Union Pacific, though, was growing its dividend and has not over the last 4 or 5, even I think 6 quarters now. So I'm a little disappointed with Union Pacific and want them to start theirs. But anyways, I do have some positions I'm watching over the next year or so here that if they do not start with dividend growth again, I'm going to be looking to trim them out of the positions or out of the portfolio. So that is the column there. And where it sits at 15% of its 52-week low, let's talk about that for a little bit. We can use BABA as an example. So right now, my cost basis is $73.09. It's at just under $76.62. I do not want my cost basis to go over this $76.62. That's kind of my limit where I want my cost basis to be, within 15% of its 52-week low. Obviously, the lower the better. But right now, 15% of this 52-week low is $76.62. So I will continue to buy BABA, even if it creeps over $76.62, so long as my average cost per share is under this 15% of 52-week low. That's what I use that for. Okay. Now, total shares sitting at 6,059.571 shares. Market value sitting at $214,512.41. I have $209,290.67 into the portfolio. I am up $5,221.74. My average return is 2.49%. My current dividend yield, 4.507%. Yield on cost, 4.619. And this, the reason it is circled here, is really what I focus on. Whether the market is up, whether the market's down, whether the market's floating and sideways. This is my passive income provided by the dividends from all the positions in the portfolio. It continues to go up every week as I add new capital. As the companies in the portfolio, you can see here, Cisco raised its dividend already this year. Enbridge raised its dividend ever so slightly. EPD raised its dividend. And what was this? NextEra Energy, nice dividend raise on that one, 10%. And NTR just raised its dividend as well. So these companies have already raised their dividends. So as I add new capital, as the positions raise their dividends, and as the companies pay out dividends, which buys more shares of the company, That is that dividend snowball and continues to grow week over week, month over month, quarter over quarter, year over year, sitting at $9,667.08. And by the end of March, this will most likely be over $10,000 in dividends. And I'm hoping that I get over 14,000, 13 to 14,000 by the end of the year. That's kind of the goal I've set for the portfolio. Here's the dividend growth sitting at 4.65%. The only negative I will say with Williams and Sonoma, it was a high grower. It did have nice high dividend growth in the teens, and I don't have a lot of high dividend growth, so that was part of the reason I bought it. I just wish I'd have bought more than 2 shares at the time, and I just wasn't adding to it. So I'm going to take the 87% and roll it through the different positions in the portfolio, and hopefully that works out in my favor in the long run. Well, that is really it for this one. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the video. What did you add to your portfolio this week? Did you have any options that hit? We had a good week in options. Very nice week. I was very, very happy with that. We won't have weeks like that every week, but we'll take them whenever we can get them. So do you do any options? Did you get any dividends paid out this week? And are you selling anything? We have a lot of companies that have really run up over the last, just 6 to 9 months, and really even over just the first couple of months, especially big tech. It seems like we're in one of those another time when it doesn't matter what big tech you're buying, it's running to all-time highs. And kudos to those of you out there who are seeing those all-time highs. But what do you do whenever you hit what you feel like might be overvalued and you're looking at potentially a big pullback, 10, 20, 30%? Do you set stop limits and sell at certain touch points? I am starting to think that if I see a position run up by 85, 90% in a year or in less than a year or a year and a half, that I might just set a stop limit and say, okay, I'll sell out of that. And then if it does come way back down, then buy back in. Just to be able to book some of those profits and reallocate across the portfolio was nice, in my opinion. $200 that I didn't have to work for across the positions really, like I said, increased my passive income this month or this next year or for $25. So it seems like a good way to do things, but I'm still working to adjust how I do that in my portfolio. When am I going to set buy limits? Or when am I going to set sell limits on positions that I'm losing on too? I think there should be a time whenever you reassess and say, hey, this position, maybe I'm down a lot and it'd be nice to wait for it to come back, but maybe it's time to sell it and move those funds to other assets where we can make a little bit more money, right? Let me know if you do that or not. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, and check out that series Monday through Thursdays if you want. We take a look at a stock that's pulled back on the day. So if you have something like that you'd like me to cover in that, drop it down below and I'll work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm going to share my opinion and investment journey for educational and entertainment purposes. Investing involves risk against money, so never invest any amount when you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice of a certified financial advisor.